Hello everyone and welcome to a new ATFX video. My name is Gonzalo Cañete and I'm here one more time again to analyze the next question. The market seems to be switching to a different trend. The question is why? And we're here to analyze all those reasons. Let me share the screen with you one more time. And remember, if you are not subscribed to our channel, my advice, click on the bell, click on subscription and follow us to keep updated for every single update that we are uploading on these social networks. Let me share the whole screen so you will see all details. Now, what we know so far. Last week, labor market, the data from the labor market was showing us that the US economy seems to be really strong. I'm talking about the unemployment rate. The theory was saying the last few months, Federal Reserve was cutting the interest rate because the US economy needs that interest rate cuts to stimulate the economy. But the problem is the numbers are not actually going in line with that speech, with that position, with that policy from Federal Reserve. And the reason why it's not going in line with that discursive narrative is because last numbers published on Friday saw us unemployment rate dropping in the United States and a non-farm payrolls rising extremely strong. In this case, in other words, the labor market in the United States is actually getting stronger, not even getting weaker. And that changed absolutely everything. A strong rebound in non-farm payrolls for exceeding expectations and prior levels indicate robust U.S. economy autonomy. The U.S. bond yield is close to 5%, suggesting that traders anticipate non-imminent interest rate cuts. So everything indicates that the interest rate cuts, it's over at least in the coming months, because the numbers cannot justify for the Federal Reserve next steps in that policy. Now, what we have, the reaction, three different markets showing three different clues about what was going on with the labor market before even the data was released. One of them was the dollar index particularly. I was setting on our ATFX reports that comment. You can check even the report, daily market report done on Friday if you want to see all details. But I was just sharing with you three factors why we think labor market is coming really strong before the numbers will release. One of them was the really strong dollar. We're gonna take a look in this video the evolution of euro dollar, the evolution of GBPUSD, which is the cable, the pound against the dollar, and we are going to analyze the evolution of gold in relation with this. If the dollar is strong, it means the Federal Reserve is not truly applying a policy to reduce the value of the dollar in general terms. Is not reducing, is not increasing the liquidity of dollars, but even is reducing probably the liquidity of dollars. That's why the dollar is keep rising, right? Market sentiment shift. We have seen that before the labor market and now completely confirmed. Markets like SP 500 has been changing the direction, has been losing the 5,800 points on SP 500 futures, which indicate obviously that the Wall Street is not happy with those good numbers from US economy, because that means the Federal Reserve is not going to continue cutting the interest rates. And the $1 million question is, what is going to happen with inflation rate this week? And you got the answer. We got we take a look basically of the evolution of the inflation rate and core inflation the last few months, and surprisingly what we can see is that inflation is actually rising. As you can see, is all these switch is coming since September, and therefore we believe even in core inflation, which is discounted factors like energy and food, to give a more average inflation approach. Both of them show us that in summer things changed, and therefore we believe that these things can take us to a different scenario now, with the Federal Reserve forced to hold the interest rate, even maybe increase the interest rate the coming months if the inflation is keep rising. Now, which asset we should look? We should look, for example, the gold, because the relation with gold and dollar is reversed. So if we see the dollar getting strong, you can see here dollar rising to 110 points mostly. The reaction of gold is getting weaker. But surprisingly, in this point, we can see an gold that is by average more or less strong compared with the dollar. And still both of them, in general terms, since September, since the last quarter of the last year, both of them has been rising. So we are in an exceptional situation with a spread between gold here and dollar here to decide what to do. Either you bet on dollar or you bet on gold, but this relation cannot be forever. I believe in some case we probably could expect that if you consider the levels reached here, 110 points on dollar, a correction could happen. And in the case of gold, it will open the door to keep rising the gold to move back to $2,725 per ounce. Remember, this is just my opinion. It's not an advice of any kind, just the opinion of the author of this video, which is myself now. Now, the other assets, euro dollar and dollar pound, both of them acting in the very, very similar way. You can see that dollar has lost these supports, and therefore we are dropping, which it was 1.5, 1.04, more or less, 1.05, 1.04, and it's dropping, and probably the target is go to parity, and even below parity if the dollar keep going up to the levels of 115, 116, which it was the projection in 2022. Therefore, be careful in euro dollar, and obviously dollar, the pound against dollar is not doing differently, because the British economy, as you can see, this was a lateral movement. In the case of UK, it was actually an ascending movement, an uptrend, but they at the end they lost and they moved to the main point that euro dollar is going, right? You can see here, probably the next target 1.18 in the case of cable, or 1.07 in the worst scenario. First scenario, second scenario, first scenario for euro dollar, second scenario for euro dollar. That's it. We're going to keep an eye on this, and we're going to follow the evolution of the market in that case. And remember, if you like this content, give us a thumb up and subscribe to our channel. That's all. Thank you for watching, and see you in the next reports. Bye-bye.